Hello and Pangapsamnida. I have now been teaching for over 9 years overseas, which means a couple things. First, it means that next month I will be 48 years old, believe it or not. It seems strange to say that, but it also means that my frame of thinking has changed quite a bit in that I'm thinking more about things like retirement and what's next, what's in the future for me, for living abroad, teaching, am I going back home? One of the things that's always been in my mind is if I ever decided to stay overseas or to retire in another country, it would probably be Korea, South Korea. Just because I have a special visa called an F4 visa, there's religious freedom in South Korea, and it's just generally a very well-oiled machine of a nation. They do things in a clean way. The quality of living is top notch, so it's really a good choice. I can go there. I can just live there. I can start a business, and I can buy a home, and that's what I've been thinking about recently. So. One of my friends there, he's born and raised in Busan. That's one of the areas that I would consider. I was speaking to him the other day about, he's a real estate agent, and I was mentioning, hey, what about this area here? And he said, you know what? The prices are really high. And it kind of set me back on my heels a little bit. I said, you know what? Prices are really high. But I didn't really know the numbers or anything like that. I knew that the cost of living is high because I lived there, so I started looking into, started doing some research myself, and I came across this report online. And the name of this report is the Real Estate Market Outlook 2020 for Korea. It's put out by some type of financial services or maybe real estate services company called CBRE. It's an Asia Pacific Real Estate Market Outlook. They do different reports throughout Asia, and this one is for Korea. Now, one thing to keep in mind, the time of this report was sometime around December of 2019, maybe January of 2020, just based on the central bank's interest rate of Korea, which they quoted as 1.25%. And I'll show some articles and some information later that indicate that that has changed. So keep that in mind. That means that a lot of this information is pre-pandemic, which is a significant factor in anything that I have to say. So any graph or anything that I show is probably from this report is probably going to need to be adjusted and more than likely readjusted downward. So this report goes on to say new jobs forecasted at 65 to 80% of the previous year. So at the time of this report, they're forecasting that the number of new jobs is going to be much less than in 2019, and that's pre-pandemic. Not a good sign of what's going on in their economy. 2019 GDP growth was 1.9%, which was below expectations. It's also below the 2.3% growth of the United States, just as a comparison point, according to the World Bank numbers. Also, at the time of this report, GDP growth was expected to be 2.1% for 2020. But since the time of this report, and considering all the things that have transpired with the pandemic, those numbers, as you'll see in this article, the numbers have gone down. The bank downgraded its 2020 economic projection to a 0.2% decline in GDP as opposed to the original 2.1%. That is not good news. And in my experience in life, these types of projected numbers and forecasts are usually conservative, especially when you're talking about potential negative outcomes. Also, at the time of this report, the central bank had its interest rate at 1.25%, which I mentioned before. But since that, and since the time of the pandemic starting and everything that has transpired, they have since lowered it to 0.5%. That is almost like free money. So I guess if you're someone that's looking to buy a car, finance a home, you're a business, you want to do some expansion or whatnot, that's a good thing. And those are the reasons why central banks want to keep interest rates low, especially as low as possible, and especially during bad times like now. It's to make sure that they're maximizing the ability for the economy, the individuals, the businesses, to be able to invest and keep the machine running. Also in this report, it said the Korean government announced plans to issue 130 trillion Korean won, which is real rough numbers, about 130 billion US dollars in bonds, which would have been an increase from 29 billion US dollars the previous year. Now that's a huge percentage increase for the Korean government to issue bonds to raise capital for government spending. Again, pre-pandemic. Since that time, the Bank of Korea has started to do buybacks of these government bonds, which of course you can check out in the article later on. But here it says we plan to actively purchase treasury bonds to stabilize markets should long-term yield volatility increase. So for anybody who is not super familiar with how these things work, I'm just bringing up a page here, and you'll see that it says when Fed policymakers decide they want to lower interest rates, the Fed buys government bonds. This purchase increases the price of bonds and lowers the interest rates on these bonds. We can think of this as the Fed increasing the money supply, which makes money more plentiful and drives down the price of borrowing. So in real rough terms, if I'm the government, you are the economy, you're the people, the businesses and whatnot, and I sell you a contract that says, I promise to pay you dividends so that you will give me money, you will give me capital so that we can run our government. And then later on I say, well, let me buy that back from you. And here, this money is going to go back out into the economy. And so that way the economy now has more money in it. It's more liquid, which means it's easier to obtain money, which means that's going to ultimately either stabilize interest rates or move them down. So that's one of the main reasons why a government would buy back bonds. So those are the economic conditions that don't look good for Korea and the real estate market. But the second factor is this: the aging and decreasing population in Korea. As of 2018, Korea had the lowest birth rate on earth. A lot of that has to do with women are now waiting longer to get married. These days in Korea, things are changing. They have careers. They want to spend time getting their career settled, then move on to marriage and whatnot. When people do get married in Korea, a lot of them now are opting to just have one child because of the cost of living and also the cost of schooling for a child in Korea. The numbers are astronomical. And I'm going to put a CPI chart up here, a Consumer Price Index chart. So it's very expensive in Korea, and that causes a lot of people not to have kids or only have one kid. Hence the shrinking population. 2019 in this report showed a record high employment rate of 60.9%, but here's the rub. 300,000 of the newly added jobs were people that were in their 60s, considered elderly. Even worse, people that are in their 40s are usually considered like prime working age. That's when you've still got physical strength and stamina. Now you've got experience and clarity of mind. Those are your prime working years. Those numbers fell to the lowest level in 30 years. Think of that for a second. That's how sharply it's falling now. The number of prime workers is now moving up so much and it's falling off so much that what is left for people who are supposed to fill that is the lowest in 30 years. Also, the number of people employed in the manufacturing industry has fallen for 21 consecutive months, which is nearly 3 years. Unemployment is up 3.3% according to the Korea labor stats. Employment numbers are always kind of funny in any country that you go to. Employment numbers are always better than unemployment numbers. One goes in one direction, one tends to be embellished in the other direction. So what does this mean for real estate prices? And someone like me or a Korean that's living in Korea that's thinking about buying a home, with these astronomical prices. You look at this chart, the consumer price index, you look at the real estate prices, they've been making insane gains for 20 years. Seoul will probably be impacted less because for all intents and purposes, Seoul is Korea. Everybody moves in there. It's the Seoul and the surrounding provinces and whatnot. That's really like the heartbeat of Korea. It'll probably be affected less, but nonetheless, I think it's still going to get hurt. Here's an interesting chart from this report. It just shows the aggressive nature of the commercial real estate market. And it's this office supply chart, which just shows this sharp increase, this glut of office buildings being built without adequate demand. You see, it looks like it's around 50% of the total number available. So the landlords, the owners, end up either thinking up alternative rental agreements and programs, or they end up having to cater to a different population than they had originally set out for. So with this potential likely collapse of the Korean economy, at least a very sharp correction, recession, and then this aging population, there's probably going to be a massive downturn or a downward adjustment in real estate prices. P.S. So one other part of this real estate market picture, the government has made it more difficult to acquire loans for Koreans. It's made taxes higher. The restrictions on getting a loan are much greater now. And I believe that that's partially due to what is causing the prices to go up in the first place, and that is these speculative real estate investors, high income, high net worth people that kind of buy and sell real estate like it's a commodity. They're not like the middle class or the people that are looking to buy homes for a home, like to live in. They're just kind of shifting them around, buy, flip, buy, renovate, flip, buy buildings, whatever it might be. And in so doing, pushing the prices up and out of range of that middle class, people that would probably just be buying a home to live in. So the government is hoping, I'm assuming, to discourage that with these reforms. It's also decreasing taxes to encourage people to invest in what's called a real estate investment trust, which, if you're familiar with what a mutual fund is, a real estate investment trust is a company that people can invest in, and they in turn go and build like a real estate portfolio with a balance in one direction or the other. And you can kind of reap the benefits of that and make some money. You don't have to be this high income, high net worth person going out and doing big things. And I think that will kind of help stabilize the market from constantly peaking and going up over peaks and then going up over peaks. And that's going to just make it more affordable for people to buy a home. You look at these charts, it's pretty obvious that the Korean real estate market is in a bubble, a massive bubble. 20 years of increasing prices, that is more than a bubble. The thing is, the pandemic might be the needle that pricks that bubble. And if it pricks it, and I think the prick of the bubble is coming, whether it's the pandemic or something else, there's going to be a sharp adjustment. There's going to be a hard adjustment. The decreasing population, the tighter loan restrictions. And if it's too sharp, maybe the government will renege on everything and say, all right, let nature take its course again. But I believe that we're kind of in that time now where you're going to see these adjustments happening, because you can't keep going like this and pushing prices out of the price range of the average Korean, the center mass of the population. Anyway, if that happens, I will probably end up living in Korea. This video went much longer than I thought it would, but nonetheless, I hope it was informative. I hope it was entertaining. And if you have any comments, if you're someone who has greater knowledge of these types of topics than I do, which wouldn't say much, but if you do, leave it in the comments section below. Be glad to read them and hopefully respond. Anyway, thanks for watching. I'll see you next time. Peace.